Welcome to Taking Stock on Wednesday, the 5th of July, 2023. I'm joined by John Human. You're right, John.
Not too bad. Not too bad. How you doing?
Yeah, well, listen, I look at yesterday we recorded this and we were looking at the markets and it was all up. And if you look at the industry today, just going straight to the London Stock Exchange cracking website, but everything's down. It's literally all down today. Yesterday, the American markets are shut. I'm assuming maybe the futures in America are not looking good, but yeah, I'm seeing some of my stocks down. So it's not a good day. And we're seeing a 0.5% FTSE 100, FTSE 250 down more than that. In fact, the AIM All share for a change, it's not down more than the FTSE 100, which is nice to see. But anyway, let's start with the rises and falls today, John. Are you aware of Glantis Holdings? As I'm looking at it right now, it's up by about 60% or something ridiculous. Are you aware of those at all?
It's not a company I am very aware of, I have to say.
Well, they are an automated payroll system. When they first IPO, they came on the podcast, the founder, and I thought this is a kind of promising company. And of course, they came at the market like a lot of other companies. They came at the market when money was cheap. The market was the top of the bubble, pretty much, in May. Well, it's summer of 21, pretty much, wasn't it? That was the top of the market. And look where the share price has gone from there. They've gone from like a quid down to less than 6 pence.
That's a very familiar looking share price.
Yeah, well, that's it, isn't it?
It's a graph, rather.
I look at so many graphs, the charts have done that because money is easy at the top of the market. And but if you zoom in on this today, they are having apparently talking about a possible offer. They are 123% up, and at the moment, the only sort of micro caps making that kind of move seems to be the companies that are under offer because they're so cheap.
Yeah, well, this is something. It's a big trend actually, and it's something I spoke to Christopher Mills at Harwood Capital. He runs an investment trust called the North Atlantic Smaller Companies Investment Trust, and he's basically saying, it's becoming very, very difficult for a lot of companies to justify the cost of being a listed company. So, they're positioning their portfolio much more towards the private markets on the basis that there are going to be a lot more take privates that we see across the UK market, and that's partly a reflection of the state of the market, but also just because UK shares are so out of favour. They are cheap.
Yeah. Okay. Well, another winner is Tintra. Are you aware of this? This is the kind of company, I don't understand it. If you are listening to this, if you're a shareholder of Tintra, by all means, get in contact. It's one of the stocks that I class as a hope, high potential stock. But I do believe it's more weighted towards the hope and the hype than the potential, because they're sort of fintech company looking to help the unbanked of the world, like Rwanda, Azerbaijan. They haven't got any licenses yet in those areas, I don't think. It's based on Web3. But I noticed now they were in favor for a while, but they've had like most companies, they've had an issue with funding, and in this environment, funding is very hard to come by. And they did do this share subscription thing, which in my mind, when I read it, just seemed like a convertible loan note, in a certain respect. And of course, shareholders don't like that, but they've announced today that they're going to pay that off, that convertible loan note thing. And as a result, in fact, let's get the chart. As a result, the share prices have shot up. But I looked at their website just now, and now it's got AI mentioned all over it. I thought, that's a common trend, isn't it? But if you see the share price today, up 34%. If we go back, though, you can see it's largely at the bottom of a downtrend, or it's the bottom of a range pretty much. I think the IPO run at this level, but it's running off that. Are you aware of Tintra in any way? I've seen they are one of the most followed. So they've released news. It's well read,
Yeah, I mean, it's an interesting story. I mean, this idea of supporting the world's unbanked it does make sense. There's another company on the London market called Finu. I don't know if you've looked at that.
Yeah, and that's called Bank as a ticker. I've been watching that as well. Yeah.
I mean, that's another sort of fintech play, not exactly the same. Its product is what do they call it? It's a plug-in overdraft.
That's right, plug-in overdraft. I thought that's quite interesting. But how big a market is that? Is it because apparently they can plug into, you don't have to change bank accounts and all that, use their overdrafts. Well, traditional banks like that though. Will they go for that? I assume they'll try and.
Well, I think that's the point. I think that because a lot of customers, potential customers, can't secure an overdraft with their sort of mainstream banking provider, that this is an alternative to that. So I mean, not entirely sure. It isn't up and running yet. They don't have any revenues, but there are lots of these solutions. The UK is a hotbed of fintech development.
Yeah,
the mainstream banking industry is very slow to adopt technology, or has been over the years. So there are gaps for companies like Tintra and Finu to exploit. How long it takes them to get there is obviously the big question, as it always is with pre-revenue companies, and therefore how much cash, what's their cash runway, which is obviously what we're seeing with Tintra, and why maybe there's a little bit of consolation today.
Yeah, I mean, ideally, is any company that came to the market that wasn't profitable in 2021, you'd hope they're raising enough money to get them through 2 years worth, because, like I said, right now is not the ideal time to raise money at all. People are finding it hard, if they're doing it at all. So many companies are, like I said, delisting. I've seen so many, of late. Anyway, another riser here, which is almost a proper, development, mature business, which is actually churning out some cash flow, is Supreme. And I know Paul Hill has chatted to you can find that on the front of Vox website, by the way, the interview with the guys there from Supreme. Are you aware of what they do, John, yourself?
I am. I've just published Paul's write-up. So as well as interviewing them, he's written a piece on the company looking at these results, which are very, very strong. And it's signed a big new distribution agreement today as well.
Yes, that's right. So that's the leading vaping brands, Elf Bar and Lost Mary.
I mean, it's straight over my head.
I've heard of those. I got a teenage son, so I've heard of those things, and I'm trying to stop him vaping. But yeah,
I'm more of a traditional cigarette man myself, which a terrible habit. But then what are vapes? And I think there was an interesting thing that Paul wrote in this, is that, I mean, you mentioned your teenage son and trying to keep him off the vapes. This is a big problem for these things. And what I noticed about Supreme is that they're putting some a lot of measures in place to prevent this problem of underage vapors. It's not good for you. This stuff is not good for you one way or the other, any more than fags are. It might be slightly better than fags, but and Paul's view is that this discipline is partly what's helping them secure really, really good agreements like this one, Elf Bar and Lost Mary, whatever they may be.
Well, no, I just discussed this with Paul before, and I said there's a fine line between helping smokers stop smoking cigarettes, of course, there's tar and all that will affect your lungs, and then getting them onto vapes. But there's a fine line between that and having them advertised in such a way. These vape bars are so colourful, they're nice little flavours. You're thinking, well, who are they appealing to? I mean, if they appeal to the smokers, fair enough. But that kind of branding, it's like, do you remember the Alco Pops? It's revisiting. Remember Hooch back in the day?
Oh,
and all that. When kids went from lager tastes horrible, but Hooch tastes like a pop. So it's that, isn't it? It's that fine line between helping smokers and all that stuff.
This is something to take into consideration, and I'm sure Supreme are, and they're actually very diversified as well. So they do sports nutrition as well, and they've got sort of other household products, and they're all like batteries and lighting. They're all very keenly priced as well. So they're in that sort of it's like the B&M sort of sweet spot. It's catering for an audience that is really sort of up against the cost of living crisis. I mean, talking of vaping, this one struck me. British American Tobacco is obviously a very large tobacco group, and it too is developing sort of next generation products, vapes, in other words. I was having a look at its website the other day, and I don't know why, but I did. And they've got a new corporate tagline, which is "Building a Better Tomorrow." Now, I can't get my head around that.
No, it's almost like the BP logo is and all that. You'll see these greens and the suns and all that. You won't see the color black in any Shell or BP's logo, which is the color of oil.
No.
I know they are trying to go to renewables, but let's be honest, guys, you still deal in oil. Anyway, listen, on the screen you can see the chart there, and there's a very interesting sort of trend line there. So bouncing up and down, and it's trying to break out. But even today, it broke out initially, went above to 124, but it's come back down to that line. So you need to see a close above that sort of level, previous highs, which are like 120. To see a new breakout trend. So it gapped up nicely, but it's come back within that trend line. So it's as yet, I mean, it has come from, like I said, again, IPO'd, again, another example, Feb 2021, rose up nicely to the summer of sort of, the winter of January, and shot down there, and then we're in a trading range. But you can see there the downtrend has ended. That's a good start. Now you want to see a start of an uptrend, but it's a good start anyway. Let's.
They're nice and cheap. I mean, just looking at Paul's piece, I think the 2024 PE multiple, forecast PE multiple is less than 8. These are cheap shares. These are cheap shares, and this is a real business. It's a real business run really well. Making money. So yeah, it's potentially in that sort of it's value. That is value.
Yeah. But looking at the losers today, I looked at it was down 16%. It was Quiz, and now they're online. Well, I think they close female. Is it female? I don't know if male or female, but
Female.
They're not closed. They do online, and they're quite a small cap. I mean, what are they? Less than 20 million, I think, aren't they? But the revenue is good. And of course, all sort of retailers. The margins aren't huge, but nevertheless, this year has been quite good. Like operating profit 2.4 million, profit for the year 2 million. But the problem of why they're a fall, of course, is the outlook. And if we scroll down there and you see you can see this article on Vox, by the way, they did say in the outlook, profit before tax for the current year will be similar to that generated in the past year. And you look back at the past year and you think, well, okay, well, it's still 2 million. So what's the market cap on this? Can you see that, Johnny? So the market cap. So 2 million is not a bad thing. I mean, you have to look into fundamentals, but they are a 13 million market cap. To me, that doesn't seem expensive, I think they've taken a big knock today just on an outlook that is not that bad. And I think that at least and I don't know what their finance situation is like. I have to delve into that. But I mean, it just seems a bit. Oh, again, if you look at the chart, it seems to have a problem getting out of this. That's awful.
I don't think the market is particularly keen on anything that's consumer focused at the moment.
No.
Actually, you've got to say that holding profits flat in an environment like this is I call that an achievement.
Yeah,
this is a tricky market. I mean, look at the recent news from ASOS and Boohoo. They had some really tough for them. So Quiz, it's got its niche, and it's executing well. So yeah, again, this is starting to look like a cheap share, but as I say, you've just got this consumer backdrop, which it's really, really hurting demand for anything consumer related, anything.
Yeah. Now, the most read RNS today is from Bidstack. Now, I was a holder of Bidstack back in the day, came to the market, a lot of hype, ad tech, within games. I thought that's the way forward. And I got into it, did quite well. I mean, I did like 4 or 5 times my money on this. But this was a hope hype potential stock. But sadly, they haven't really delivered. And they've missed now about 4 of their forecast guidance, 4 years worth. So and they've had issues with one of the big contracts they've had, and now today there's a request of a requisition of a general meeting, and the letters, and this is from Interactive Investors, Hargreaves Lansdown and Lawshaw nominees on behalf of underlying investors holding about 5.25%, and they request they remove Glenn Calvert and Lisa Howe from the office of directors. There's no mention of James, the CEO, in there. James is one of these guys, a very good talker, and he sells it very well. And whenever I've gone wrong in a company, I've overly believed the CEO and under believed the figures.
Wow.
Figures are fact. And CEOs, while they've got to be a bit of a salesperson as well, because they've got to sell the company. The fact that now they've missed their forecast 4 years in a row, and they're also very heavily still burning a lot of cash. You've got to be aware of that. And in this environment, like Buffett says, in this kind of when the sea goes out, you see who's naked. And I think with companies that are needing money, they did say they're going to, I think, do a convertible loan note in their last final results. But are you aware of Bidstack at all, John?
Not massively. It's I know what it does. I've keep an eye on all sorts of companies. But a programmatic native in-game advertising. I mean, it's again. I mean, it's computer gaming and vaping are like 2 things I don't really pay much attention to.
2 things you should get into, John.
Indeed. But these, I mean, it's again, it makes sense. You've got these very, very realistic computer games, video games that you see now. Advertisers want to sell their products. Why not advertise in-game? It makes a lot of sense. But it's all about execution. All about execution and getting the money coming in before you run out of cash.
Exactly. It takes a long time, doesn't it? You realize, I mean, if you look at that chart, that's complete. If you go to sort of Wikipedia and look at the hype cycle and look at the chart of hype cycle, it'll fit this. And especially when it comes to stocks, like I said, we talked about this sort of yesterday. When you IPO'd here, there's a lot of hype about gaming, how fast the gaming market's growing and how they can monetize that better. And of course, BidStack sits in the middle of that. So it's a huge players in the gaming industry. And so the hype went up from like literally, and I sort of got in around here. It was like at the time, it was like, I think a 12 million market cap, and it shot up to 18 million market cap, 80. And then the revenue was forecast to come in for the first year at 5.6 million, I think it was, or was it something like that? So that's good from the get-go. And they came in at something like 36 grand. I go, what? So literally, I just started selling my shares. And I think a lot of other people did, and it came down. And it's had some rallies along the way, but it's never really got back to those highs. And now it's at pretty much, I think, 52-week all-time low, I think, below the IPO level, because they've come and stuck with a bit of financing. That's something to be aware of, microcaps. They're burning a lot of cash like that. You've got to be aware that where's that cash going to keep coming from? Because if they've never had sort of profitability forecast, and they think, well, where do they keep getting that money from?
Yeah. I mean, it is growing. I mean, the top line is growing. So, turnover 2.6 million in 21, 5.3 million in 22. So there is demand for what it's doing. But again, it's how efficiently you can deliver that.
Yeah,
I think the
cash burn. The cash burn is 7 8 million a year. Though it's a trouble. And I think in good times when the money's cheap and you can get access to money, it's fine. But loss after tax is 7.7 million. Yeah, it's fine. But when it gets hard and people don't want to, risk averse, they're not going to loan you money, are they?
No. Do you know what I think is most interesting about this is the fact that this is a bit of activism, essentially. So calling for, intervention in the running of a company, the replacement of board members from nominee accounts. So, Interactive's Hargreaves, these are the people we all broker with. And, we rarely get the opportunity to sort of, call a general meeting as a major shareholder. We don't. It's, we don't have that sort of clout as some sort of fund managers and activists do. So this is really interesting that smaller investors seem to be pooling together, helped, I would imagine, then by Interactive and Hargreaves to actually, become activists. This is quite interesting. Maybe this marks the start of a trend. I've not seen this before in this way.
Yeah, no, that is, it's good to see, because like I say, you're a shareholder in a company. If you don't believe it's being run correctly to its potential, then get involved.
But a lot of investors just don't get involved with their companies. Yeah. This is the other interesting thing. A lot of investors don't vote at AGMs. They don't even go to AGMs. So I think to make companies better, retail shareholders do need to engage more. That I think that's on us as shareholders. So this is good to see.
Yeah, part of my strategy is if I lose money in the stock, I always blame myself. It's always my fault. I don't care what the management have done, because I mean, to me, in that stock there was plenty of warnings that the cash burn was very high for many years. They missed their forecast for many years. Why stick with the company if that keeps happening? I got a rule of thumb: you can let me down once as a company, okay, that's your final warning. Let me know again, I'm out. That's it. Full stop. Because there's other companies. I don't know how many listed shares are there, but thousands. You've got other opportunities out there. There's no point hanging around and to a certain extent, again, figures are fact, and it doesn't matter how good the CEO is at telling you where the story's going, how big it's going to get. Figures are fact. Full stop. Everything else is opinion, and I think you can stick with that. And people hang on to sometimes shares, just believing hope above anything else. And that can be dangerous. Never fall in love with a stock or company, because if they start going on the wrong route, and then all of a sudden, you get burned, and they start blaming the company. Well, there's plenty of red flags there, plenty. And also the ultimate sort of protection is diversification a little bit. Don't put everything in one basket.
100%. I mean, this is sort of, it's classic cognitive bias stuff, behavioral finance.
Yes.
And there is one bias, which is like, you don't crystallize a loss by not selling. So it's not a loss until you've actually crystallized it. And that's a very strange thing. That's a very strange thing to think. But our brains they do strange things when it comes to investing.
Absolutely.
So something to be mindful of.
Yeah, absolutely. Honest of the day, I put two in here. I don't know if you've got any to add, but I mean, I think Prospect. I talked to Mark Routh, the CEO of Prospects, and for years, 2017, they started with this prospect, this gas prospect in the Salva field in Italy. And now it's gone through, and he's a new CEO, Mark. He's been for a year now, probably, but they've now today started producing gas from it, which is a long time to get going. But now they've got two sort of producing assets, one in Spain, one in Italy. So I think that's a milestone for them, as he said. So fair play to them there. And the other one I think is another honest worth reading is Equals, still performing. They've grown a lot. And when you get growth on top of growth, you can't keep growing at that rate. But even so, they're still growing quite well. I mean, if you look at the change there, it's still double digit high revenue top line growth. So I think two companies there, one's going into sort of generate revenue and one's increasing their revenue, which consistently. So I think two companies worth looking at.
Paul Hill's written up Equals on the Vox site. Have a look at that. He's upgraded his forecast. Again, it looks very cheap. Got this big acquisition that's just completed. Which is sort of it really sort of increases their addressable market, quite considerably. So yeah, it's a nice little company. Prospects, I mean, you always got to love a producing oil and gas play.
Yeah, but oddly, it's funny how it's almost like you say with stocks and shares. It's about the journey that really gets things going. If I share the chart with you,
I was going to say show us this chart because I bet this is a nice looking one.
But this is where the expectation of production was coming in. Expectation is getting close. Actually, there was floods in Italy, so that took a bit of a knock there. But now it's a lot lower than it was than sort of the expectation of it happening. So that's it. That's a lot. That explains why when you get sort of companies, share price rises towards results in some way, and then results happen, they're okay or they're good, and the share price comes off because that's sort of baked in already, isn't it?
No, those floods are interesting because what it did, it was just delayed their permitting. Because Italy's emergency services were obviously busy dealing with floods and didn't have enough time to be supporting the permitting process at Prospect, but I think this is great to see. It's got an offtake agreement with BP, I think it is BP Gas Marketing agreement, which is so it's selling it, and it's got really nice asset in Spain as well. The solar asset, or it's an asset which is supported by solar. So I think this is a really nice little company.
And it's linked to obviously the gas price as well, which has come off massively. And in fact, I'll show you let me just find that commodities. If you look at the natural gas prices here, commodities, natural gas. And if you look at this, it's come off massively. This is the before the Ukraine war. This Ukraine war started, and I'm up to, I don't know what metric this is, but 9 million MBTU. This is so it went at 9, it dropped down to almost 2, and now it's starting to rally a little bit now. So you can see that's probably safe at the bottom. So Mark was saying as the gas price goes up, we'll get more, of course, for our gas. But I think you can safely say that's the bottom there. But it's a phenomenal drop in the gas price there.
Oh, it's been crazy. It's been absolutely crazy. This has been been unprecedented. What's happening in energy markets, it's really quite extraordinary. This is the one thing that oil and gas companies cannot outrun, and this is the price of the underlying commodity. Whether you're Prospects or Shell, this always matters. What you want to then see is this company turning it into cash flows, and you want to see those cash flows rising, and it seems to me that is what Prospects is doing. So yes, there is this correlation with gas prices and oil prices, but if that company is growing production and increasing cash flows, then it's in a good spot.
Yeah, this is the chart of Equals, and look at it, one of the companies that's done very well during this downturn. Most charts of AIM companies have opposite to this pretty much for this period. It's gone from like 20 pence up to quid. It's tried how many times to break that pound level, and it keeps having a problem there. 4, 5, 6, 7 times, and you can see, and in fact, you can see how far it was above the share price, above the 200-day moving average most of the way up. Dipped once here, and then again here, and then we start getting congestion there. It's consolidating, so it may have to go sideways for a while before it takes another leg up. But
again, into those markets, sideways is pretty good.
Yeah, exactly. As long as it's not going down, that's fine. I know exactly, and Okay, so as far as most followed companies, Alba Mineral Resources, of course, big rise yesterday. So and they've also just raised some money today as well. So that'll help them. But that was up 50% yesterday. So you tend to find people follow companies that are rising very quickly. Supreme is there. Guild Esports as well, which is it's in a tough spot at the moment with Gfinity. Gfinity have an absolute nightmare. And I worry about the outcome for that company. But so charts there. In fact, it's worth looking at. We looked at Supreme, but I'll just quite quickly look at Cakebox recently come out with news, and they're almost like they've had this horrible time where they're the CFO, the figures are messed up, they get rid of the CFO here. And then you had the cost of living crisis and they say, okay, producing cakes is quite energy intense. They had that knock as well. But like I said, again, this is a company, a lot of charts like this have seemed to have hit their low. And as you can see here, at a trading range right across here at sort of 130, and that's broken up above that, which is good to see. So you can say downtrend has ended, probably the start of an uptrend on Cakebox, which is quite nice. And Araku today announced some news at AGM. They've taken a massive knock as well, but you can see
you looked at this, didn't you? You did a little video on it because they got absolutely whacked.
Yeah, they did. Yeah, I mean, essentially, it was a case of their revenues are going to go up, their margins are going to come down because apparently big projects are being put off. They've got a lot of contracts with local authorities, and they're in, sort of helping local authorities go from sort of gas, electricity to sort of renewables, heat pumps, but also they've got water technology, so it helps the pressure and reduces the use of water. So I quite like the company, but they came up with a bit of profit warning. Revenue's the same, but profits going down, but I think they're going to do like 7 million in pre-tax profit this year, and they're valued at 45 million. But if you notice there, you've got a 20-day moving average here, and it literally hasn't gone above that since it's tried to for a while, and it's dropped off a cliff. Today, on the Newsday AGM statement, it's gone above that. So you could say even it's maybe very early stages, but maybe that's the start, maybe of the end of the downtrend. So if you're going to research this company, I did put a video out on this. Have a look into them because they're in a very hot sector, and I think it's a very decent company. And they have been in this market. You issue a profits warning, and literally you fall very heavily.
Yeah. I mean, I like this sector as well. I think the whole theme is a really interesting, important one. Water.
Yeah.
I think we're going to touch on that again in a minute.
But quickly, sorry, go on, John.
No, there's three companies I've got my eye on here, and Eneraqua is one of them. And it's the water side of the business that I find particularly interesting. They're doing projects, as you say, with local authorities. All of who want to help manage water usage, but they're also doing stuff in India with irrigation, which is it's a problem area when it comes to protecting the world's water. Yeah. But then the other two, you've got Ondo Insurtech, Hotstock, and Water Intelligence, both of which do leak detection on behalf of utilities and insurers. And I think this is a really interesting sector, especially given some of the, you look at America, California it's really, really bad, the situation with water there.
Yeah.
And over here, obviously, we've got our own problems with water, but these are global issues. I think it's a good sector.
Yeah. Well, is it Michael Berry? I think the guy from what's the company?
Big Short. It is.
The Big Short. He was the guy that went mad shorting the mortgage crisis. They were saying you're nuts, and they started pulling funds from him, saying the mortgage market never goes down. But he was right in the end. But at the end of that film, he said, now the next thing he's looking at is water.
Yeah.
So that's very interesting there. But going on sort of macro stories here, Thames will need substantial sums of money to stabilize its finances. They say the water regulator said there, customers will not be made to cover the cost if Thames Water goes bust. The boss of regulator. If it goes bust, what happens there then? Because I'm sure, the government got enough debt. I was hearing on Radio 5 Live saying the government got enough debt and they got to service a lot of debt because of the interest rates. Will they want to take on more debt from Thames? It's a worry, isn't it?
The debt is 14.5 billion, near enough. And, I've got a chart of it in front of me. When you look at the debt profile, in the early 90s, it had virtually none. Virtually none. So in the space of 30 years, it's accumulated all this debt. And really, it comes down to Well, I hesitate to use the word asset stripping, but Macquarie, big infrastructure investor, big Australian infrastructure investor, basically bought this company, loaded it up with debt, paid itself a shed load of dividends, and now here we are. Didn't invest. I mean, what does the government do? They don't want to take on 14 billion pounds worth of debt. The shareholders are going to get wiped out if this company fails. They'll get wiped out, and rightly so, because they're the beneficiaries of these dividends. I was looking. I found a stat. Where is it? The water industry paid 1.4 billion in dividends in 2022. 1.4 billion. But management teams have paid 25 million quid between them.
God, I know. You start to realise, when it all unfolds, the amount of misuse of funds are being misdirected in certain ways. But it's crazy.
There you go. Thames Water dividend payments over 32 years total 7.2 billion.
Wow. And there's still, and I saw a stat actually yesterday. A little in the last 12 months, I think was it 300,000 sewage sort of outlets issued into riverways and rivers 300,000 times. It happened last year. So anyway, I don't see the big deal in this other story. There's a big story on BBC News and Sky, but apparently plans to close almost every railway ticket station in England are expected to be revealed today. The Sky says it says 12% of train tickets are now bought from offices. So only 12% are bought from tickets and offices. It'll be a bit like these in supermarkets now. You can get a scanner and you go on scanning stuff and you sort of do your own stuff. But there's someone there to help you if you've got an issue. What's the problem with that? It's automation. That's the way we're going, isn't it? I don't see the big deal in this. I mean, is it the one person who's in the ticket office will just now walk around by the automated ticket screens? What's the big deal?
Well, I mean, I would suggest, and do you know what? I just say one thing about the rail industry in this country. It's pretty much as bad as the water industry in terms of in terms of the way it's been mismanaged, in terms of the approach to privatization, and the sort of real lack of investment in the rail network. It's a real shocking state of affairs, and I say that as somebody who commuted for the best part of my career. It was expensive and horrific. But I think the problem with rail tickets is that they're really complicated. So the ticketing system in this country, because you've got all these different networks, it's actually really complicated to buy rail tickets in the UK. There are so many options and versions that it's for most people it's very confusing. And this is why I think you actually do need a ticket office. Well, why do we need an office though? I think they just want to shut it down, put a shop there maybe, and earn some money from it. I mean, as long as you have someone on, exactly. As long as you have someone on hand to help you sort out the automated. Because if my parents were around now, they wouldn't be able to use that at all. So when he just sorted the internet out. But I mean, I do feel sorry for older people, but they are quite confusing. In fact, I don't go to train stations very often. When I go in there, it takes me a while to figure out what I'm supposed to be doing. So I mean, I buy them online. Direct from the operator, and then get an e-ticket and pick it up for the machine, or just leave it on my phone. So there is a case for automation, and closing down a lot of these things. But then it's like bank branches as well. The closure of bank branches over the years has left many people in a position where they struggle to access the financial services that they need.
Well, maybe Tintra should be in this country, right? The banks of the third world developing countries. Maybe it should be
exactly. This is why the likes of Tintra and Finu and fintech is emerging, because this real world presence is being taken away. It goes back to something I think you said, Justin, that if you don't have a mobile phone in society today, you are in trouble.
I know you can't do anything. I know
digital poverty. So So I do think there is a balance to be struck.
Last story here. I mean, we sort of in this, but interest rates now, above 6% they are at the moment. But sort of playing on from yesterday, they're saying now the gap between mortgage rates and saving rates of over 4 percentage points. So the banks are raking in on the old loaning out money, but as far as paying savers money, there's a big gap there, isn't it? And that's why they've been. But you know what? I don't know. It's funny that the Bank of England are ratcheting up interest rates to try and bring down, slow the global, slow the economy down. I don't know if it'll have a massive effect. I'm reading stats that surprised me. I've read stats that are different to that today. But apparently, of all the homeowners, there are more now without mortgages than with mortgages.
Yeah.
there's about 28% with mortgages, and of those people who have to refinance, it's about 1.4 million in 2023. So I don't see how, if it's only 1.4 million entire year refinancing, how that will have a marked effect on a slowdown in the economy. Of course, in fact, it's more than that, isn't it? About loans as well, just general loans, I suppose, and businesses having overdrafts and refinancing. So I mean, it probably will. But I'm surprised
I think
people had how people didn't have mortgages.
Yeah, I mean, I guess it's a demographic thing. You've got a lot of older homeowners, boomers, you might want to call them. Which has become a disparaging term, but yeah, they own their homes outright. You've got a lot of people with sort of a few buy-to-let retirement properties as well, which they own outright. So this is true, but this is why I think what you're going to see in the economy is perhaps a two-speed economy. So you've got a generation that are sitting on lots of property wealth, savings, pensions, etc., and you've got a younger generation which can't afford these sort of rates, especially in respect of the affordability ratios on housing. It's completely stretched beyond belief. Yeah. I think I saw a stat that said houses have never been more expensive since the Victorian era. In terms of sort of income to price ratio. So you basically got a two-speed economy in which half of it we can't afford to get on the housing ladder. The rents are going up, the bills are going up. They're never going to be able to save that for that mortgage. And that is a drag on the economy. So
well, I've read. So was it like I think back when the interest rates started going up previously in the 80s, I think it was the average, pay to mortgage about 4 times. Now it's more 10 times.
Yeah, exactly.
So that just shows how more expensive it is. But
yeah, it's worrying. It's really quite worrying. But as you say, the housing market is somewhat protected by the fact that there are lots of outright owners, and it's somewhat protected by the fact that there is still a lot of demand for housing. We don't have enough housing. We're not building enough housing in this country.
Yeah, but do you know what? I feel more sorry for people who I know people have been stress tested. Apparently, they've been stress tested now above this level that we're at the moment. So people who got mortgages at 2%, they have been stress tested. Whether they're telling the truth or whether they have the same job as they did back then, I don't know. But it's new people trying to get a mortgage is not so bad because they've never known a mortgage before, and that's what it's paying them 6%. If people go from 2% to 6%, that's going to hurt a lot.
It is going to hurt. It is. I think the people that it's going to hurt the most, though, are leveraged landlords. So I think, buy-to-let landlords who've sort of built up a property portfolio but have used debt to do that, which you've been able to do. I saw a guy interviewed and he said his mortgage on his last buy-to-let had gone up something like 300%. The monthly mortgage payment. And obviously you can't pass that on. So what you might also see is a lot of buy-to-let investors withdrawing from the market, and then you get housing market weakness. So do you know what, one final story, John? I put you on the spot here. I just want a one-word answer, right? And your answer will be either Nigel or Coutts. Now, I don't know if you saw this. Nigel Farage apparently fell below the financial threshold required to hold a Coutts account, which is a very posh bank, of course. The Queen apparently banks there. But apparently you must have either £1 million invested with them or £3 million of savings. Now, they've cut his account with Coutts, saying he hasn't got enough funds. And they said, have a NatWest account, which they also own. Now, he says, it's not about the funds. He hasn't denied the funds part of it, but he said it's more political. Now, who do you believe would tell lies here? Nigel or Coutts? Do I really have to answer that question? One thing I would say is I do find it quite strange that Coutts would come out and talk about the level of savings in a man's bank account. I would have thought that is a huge breach of GDPR regulations.
Yeah, that would suggest it's a bit political then. But I think they wouldn't lie outright. I think he'd have to go below that threshold for them to say it, because they wouldn't just lie outright, surely, and say, because they could be. It's quite obvious. They could show that in his accounts. But I think he's not admitting he hasn't got that much money. So I think he's gone below that account. He said, "Oh, you used a bit of publicity for us. Nigel Farage has gone below that threshold. Let's get rid of him." Okay.
Can I have a 3-word answer on this particular? I don't care.
Yeah, exactly. That's my story 4. Okay, just looking quickly at the futures in America, you can see the futures are down, and that's why probably our markets are taking a bit of a hit there. So they're down, 0.4% and all that, and that's why we're down. So there we are. So it's not a happy end of the day, but who knows? You could get some bargains. There we are. Thanks for that, John.
Lovely. Thanks, Justin. Thank you.